What if the next big move in Bitcoin is not just about crypto at all? What if the real story is happening far beyond the charts? In geopolitics, energy markets, central bank expectations, and the growing battle between fear and liquidity. Because right now, Bitcoin is showing strength. On April 27th, the market was reading Bitcoin as trending up, and recent price data around that date shows BTC moving in the high $70,000 range. But the big question is not whether Bitcoin is moving. The question is, why now, and can this move last? Welcome back to the channel. Today, we are breaking down Bitcoin's latest upward momentum, what the chart is telling us, and why the wider global environment may be playing a bigger role than most traders realize. Bitcoin's latest move. Let's start with the obvious. Bitcoin is back in focus. According to Kitco's April 27 daily chart alert, prices were trending up, which is usually a sign that short-term momentum has shifted in favor of buyers. Around the same date, market pricing data placed Bitcoin in the high $70,000 range, with one history record showing BTC around $78,670.85 on April 27, 2026. Kraken also showed Bitcoin trading near $78,187, reinforcing that the market was holding elevated levels rather than collapsing. That matters because Bitcoin is not just reacting to one headline. It is behaving like a macro asset again. And when Bitcoin trades like a macro asset, it begins to move with a blend of inflation expectations, liquidity flows, risk appetite, and global uncertainty. That means the real story is not just Bitcoin is up. The real story is what is supporting the move, why the market cares. One reason Bitcoin can strengthen in uncertain periods is that investors often start looking for alternatives when the world feels unstable. At the same time Bitcoin was showing strength, geopolitical reports were highlighting major tension in the Middle East, especially around Iran and the Strait of Hormuz, with wider implications for oil prices and global supply chains. That kind of environment can lift interest in scarce assets, especially if traders expect more volatility in currencies, energy, and policy responses. When oil shocks rise, inflation fears often follow. When inflation fears rise, people start questioning whether traditional markets are the safest place to be. That is where Bitcoin often re-enters the conversation. So even though Bitcoin is a digital asset, its price is increasingly tied to the physical world, war, shipping lanes, oil, interest rates, and political uncertainty. The technical picture, from a chart perspective, trending up usually suggests more buyers are stepping in than sellers, at least for the moment. That does not automatically mean a long-term breakout is guaranteed. It simply means the path of least resistance is upward right now. This is where many retail traders get trapped. They see a strong candle, assume the breakout is confirmed, and then buy too late. Then they get shaken out if the market pulls back a few percent. Bitcoin often does this. It moves aggressively, pauses, retests, and then either continues higher or turns into a fake out. The current setup suggests a market that is still very much alive, but not necessarily comfortable. That is important because markets rarely move in a straight line. Even strong trends are built through hesitation, consolidation, and sudden bursts of volatility. So the key question becomes, is this a healthy trend, or is it a euphoric move being pulled forward by fear and speculation? Macro forces at play. To understand Bitcoin right now, you need to zoom out. The geopolitical backdrop in April 2026 has been intense. Independent reports have described a conflict involving the U.S.-Israel coalition and Iran, with heightened concern about energy routes, military escalation, and global market spillover. That kind of instability can push investors toward assets they believe cannot be printed, sanctioned, or easily controlled. Bitcoin benefits from that narrative. But there is another layer: expectations about monetary policy. If investors believe global instability will slow growth or force central banks into a more cautious stance, risk assets can catch a bid. And when liquidity expectations improve, Bitcoin often moves before the broader market fully catches on. This is why Bitcoin rallies can feel strange. Sometimes they are not driven by crypto-native excitement. Sometimes they are driven by macro anxiety, the psychology of a move. Now let's talk about trader psychology, because this is where most people lose money. When Bitcoin starts climbing after a period of uncertainty, three groups usually appear. First, the believers who think every dip is a buying opportunity. Second, the skeptics who wait for confirmation and often buy after the move is already extended. Third, the panic traders who see volatility and either chase green candles or sell into strength. That mix can create explosive price action. And that is exactly why a Bitcoin uptrend can feel so deceptive. It does not just reward conviction. It also punishes hesitation. The market often keeps climbing just long enough to make doubters feel wrong, and then it shakes them out with a sharp pullback. In other words, rallies are not just about price. They're about pressure. The bigger story for crypto. Bitcoin's latest strength also matters because it tends to influence the rest of the crypto market. When Bitcoin rises with conviction, it usually improves sentiment across the sector. Traders begin to speculate about Ethereum, large-cap altcoins, and even smaller speculative names. Liquidity rotates. Social media gets louder. Search interest rises. And suddenly, the entire market feels alive again. But that is also where discipline matters most. A strong Bitcoin move can lift the whole market, but it can also hide weakness underneath. If BTC is rising while other assets lag badly, that could be a sign that the move is concentrated rather than broad-based. That usually means more fragility than euphoria suggests. So this is not just a Bitcoin story. It is a test of whether the crypto market has real follow-through. What could happen next? There are three realistic paths from here. First, Bitcoin continues trending up, breaks through nearby resistance, and attracts new momentum buyers. That would signal genuine market strength and possibly set the stage for a larger move. Second, Bitcoin stalls here, chops sideways, and then retests lower support before deciding on direction. That would still be healthy if the trend remains intact. Third, this move turns out to be a short-lived reaction to macro headlines, and Bitcoin falls back as traders take profits or global risk sentiment cools. Right now, the chart suggests strength, but the broader environment says caution. That combination is exactly what makes this moment so interesting. What viewers should watch? If you want to follow this move intelligently, watch these factors closely. Bitcoin's ability to hold its current range after the recent upward push. Whether geopolitical tensions continue to support safe haven or scarcity narratives. Whether oil prices or shipping disruptions intensify market anxiety. Whether traders begin rotating into altcoins, which would signal broader risk appetite. Whether Bitcoin volume confirms the move, because rising price without strong volume is less convincing. If those pieces line up, the rally may have more room to run. If they do not, this may just be another powerful but temporary Bitcoin spike. Closing segment. So here is the real takeaway. Bitcoin is not moving in a vacuum. It is rising inside a world filled with uncertainty, geopolitical stress, and shifting investor psychology. The chart says momentum is turning upward, but the macro backdrop says this move could either become the start of something bigger or a sharp, emotional reaction to global instability. That is why this matters. Because in 2026, Bitcoin is no longer just a crypto story. It is a global story. And when global fear rises, when markets get nervous, and when confidence in the old system wobbles, Bitcoin often becomes one of the first assets people look at. The only question now is whether this move becomes a breakout or the setup for the next trap.